Hello and welcome. This is the first video in the series, 5 of the most used strategies to trade a trend. In this video, we will focus on the MACD indicator and the best way to use it. We will explain what MACD is, how it works, what are false signals, and which signals are strong ones. We will also explain when you should avoid trading, and, most importantly, how MACD indicator can help you identify strong entry points for a trade. Without further ado, let's dive into what MACD is. MACD stands for Moving Average Convergence Divergence, and it is a popular technical indicator used by traders to identify strong entry points for trades. To get started, go to tradingview.com and choose your trading pair. Then, go to Indicators and type Moving Average Convergence Divergence, and select this one here. Click on it, and it will be automatically added to your panel. Go to Settings and check if all the settings are preset to the right values. Fast length should be 12. Slow length should be 26. Source is set to close. And signal smoothing is set to 9. The other settings, like color, can be changed, but we prefer the preset colors. Now that we are all set, let's see how the MACD indicator is constructed. MACD consists of two moving averages, the MACD line and the signal line. The MACD line is calculated by subtracting the 26-period exponential moving average, EMA, from the 12-period EMA. The signal line is a 9-period EMA of the MACD line. There is also a histogram which graphically shows the difference between the MACD line and signal line. The further the lines are from each other, the bigger the histogram bar is. Also, when the MACD line is below the signal line, the histogram is red. And when the MACD line is above the signal line, the histogram is green. The fourth component of the MACD indicator is the zero horizontal line, also called the baseline. Now that we understand all components of the MACD indicator, let's see how it works. When the MACD line crosses the signal line from the downside, it is considered a bullish signal and may indicate a potential buy opportunity. Conversely, when the MACD line crosses the signal line from above, it is considered a bearish signal and may indicate a potential sell opportunity. Okay, so this is the theory, but as you can see, there are many crosses, and only a few of them indicate good entry points. To find strong entry points, you need to take into consideration where the cross happens. That's why we are looking for a bullish cross only if it happens below the zero horizontal line. And in the case of a bearish cross only if it happens above the zero horizontal line. So, what's next? Is this it? Does this make me rich? Not really. MACD works best when it is combined with other technical tools. For the purpose of this video, we will combine it with exponential moving averages, specifically EMA 200 and EMA 50. We explained how to identify trends using exponential moving averages in our previous video. You can find the link to that video in the description or click on the upper right corner to watch the video. Alright, now we have brought EMA 200, the blue line, and EMA 50, the orange line, to help us identify only strong entry points using MACD crosses. In our trading setup, we want to trade with a trend. In the case of a bullish signal, the following two conditions need to be met. The first condition is that the orange EMA 50 line needs to be above the blue EMA 200 line. This confirms a bullish trend. The second condition is that the bullish MACD cross needs to be below the zero horizontal line. These are a few examples. You can clearly see how powerful this bullish MACD setup is in a trending market. Now, let's see how to identify this setup in a bearish trend. As mentioned before, in a bearish trend, two conditions also need to be met. The first condition is that the orange EMA 50 line needs to be below the blue EMA 200 line. This confirms a bearish trend. The second condition is that the bearish MACD cross needs to happen above the zero horizontal line. These are a few examples of bearish signals. You can clearly see how powerful this bearish MACD setup is in a trending market. Well, now you have learned how to identify good entry points using the MACD setup. We hope you found this video informative and useful. Follow us to learn how other indicators work with exponential moving averages, and how to identify great entry points using them. If you have any questions or suggestions, please leave us a comment. Thanks for watching.